what should investors do in this scenario? And before you answer, we have a relevant fan question from CS Low. And then shout out to Danny Long, who had a similar question. A lot of our fans actually had this kind of similar question. But basically, Luke suggested that we should first go for the hypergrowth stocks as they tend to react first prior to the broader market melt-up. Do they also tend to fall first prior to the crash? I noted Luke saying no need to worry about the crash now, but just to get better understanding of the price behavior of these hypergrowth stocks during the up and down cycles. By the way, Luke also mentioned to look out for the number of VIX numbers as indicators prior to the crash. What are you talking about when you're talking about VIX? So a lot in there, but let's take it like point by point. Is first, I guess, do hypergrowth stocks tend to fall first before a crash?
Right. So let me pull up some. Yes, they absolutely do.
Mm-hmm.
But to think, I'm sorry, I'm pulling up an image on this screen. I'm going to pull it up over here.
Mm.
That's really small, isn't it? That is the lowest quality image I think is possible. Anyways, can you see it a little bit?
We'll make sure to put it full screen on the.
Okay, great. So yes, the rolling bear market theory. The rolling bear market theory is that bear markets don't just appear suddenly out of nowhere.
Mm-hmm.
They first appear kind of sneakily
Mm-hmm.
in the riskiest corners of the market,
Mm-hmm.
and then over the course of 12 to 18 months roll into the other sectors of the market, getting less risky each time until it gets to the most, the safest assets, and then those roll into a bear market. That's the rolling bear market, and that's how the whole market goes into a bear market. The other side of that is that not only do we roll into bear markets, but we roll out of bear markets. So the things that tend to roll in first, the riskiest corners of the market, are the things that tend to roll out first as well. So we roll into this bear market, and then we roll out in the same order. Basically, hypergrowth tech stocks, speculative tech stocks, risky stuff, cryptos, they're the first to roll into a bear market.
Okay.
Then you're gonna go to maybe I think the order this year was hypergrowth tech stocks fell into a bear market in around, they started collapsing in like February 2021. Then you started to get software stocks around the summer of 21. You started to get cryptos in December of 21. It came into a bear market. Then you had the Russell 2K in January, large cap tech or just all tech in February, large cap tech in March. And now it looks like the bonds went in April. They went into a bear market. And then now you're looking at the S&P getting into a bear market. The Dow, even energy is getting hit hard now. So even the bear is not stopping for anything. This bear is just going through everybody. So if you think you're playing it safe by riding the stocks that are doing well right now, that's probably the most risky place to be, because this bear is coming for you. This bear is chomping every sector, and he's not going to stop, or she is not going to stop until they get to the very end, the very final stock, the very final asset in the marketplace. That's how this bear is looking right now. It's looking very strong. So to answer the question, long story short, yes, they are the first to roll in. That's where we come to this chart. This is a chart of what we did is we ran an analysis on select speculative tech stocks, hypergrowth tech stocks during different crashes. So the blue line represents the average decline in these hypergrowth, a basket of these hypergrowth tech stocks during the 2000-2001 dot-com crash. The orange line represents a basket of hypergrowth tech stocks, the average percent decline there during the 2008 crash. The black line represents hypergrowth tech stocks percent decline average during the current market crash. So as you can see, these crashes tend to last about 250, 350, somewhere in 300-ish days. And then they bottom at around 65% in the 2008 crash, around 85% in the 2001 crash. And where are we right now? That black line, we are already 350 days into the hypergrowth tech stock crash. This started in February 21. We are 15 months into this crash. These stocks on average have dropped about 80%. So if you historically line this up with the precedents of how these stocks behave in previous crashes, we're in the final innings.
Okay.
You know, these are looking very close to developing a bottom and then rebounding, stabilizing and rebounding over the next 12 months. And that's why we're very confident in the next 12 months producing pretty large returns in these really washed out hypergrowth tech stocks. The bear is chomping, but it's already chomped on these guys.
Okay.
These stocks are smacked to death. I mean, even during the biggest tech stock crash of all time, they only fell 10 more % from where they are right now. So we're talking about, you know, again, the final innings of a sell-off, forming a bottom and looking to rebound. Now, I don't think this rebound really materializes until some macroeconomic factors start to swing in favor. But having said that, these stocks will rebound before the rest of the market does, simply because they've already been.
They're already at the bottom.
Already crashed. The bear has moved on.
Gotcha.
It's like imagine a bear going through a neighborhood and it goes through one house and it ransacks the house and it eats all the food and then it moves on to the next one. You're safe if you're in the house that the bear's already ransacked, because the bear's not going to come back. There's no more food there. There's no reason for it to be there. You're not safe if you're in the house way up the street that hasn't been ransacked yet, because this bear is still coming, right?
Yeah.
So that's the analogy, that the way you should look at this right now is you want to be in the houses that have already been ransacked by the bear. This is the house that's been ransacked the hardest. This is the house that's going to rebound first, rebound the fastest, and rebound the biggest. So looking for stocks to buy amid the market volatility, right now you got to put on your blinders. You got to look at a really beaten up tech stock that you absolutely love. That you are just in love. You are very much convinced. You have a high degree of conviction that that company is going to grow very quickly and profitably over the next 5 to 10 years. Put your blinders on, buy the stock, buy more of it on big down days, and just put it in a coffee can and forget about it. Ignore the macroeconomic noise, ignore the recession talk, ignore yields, ignore all that stuff. Put on the blinders and focus on that. Because it's really easy, if you take those blinders off, to look and see, oh my gosh, all this stuff that's going on. Should I be in this stock?
Yeah.
But historical precedents. It also felt that way in 2001. People were saying the internet was a fading fad. People were saying that it's never coming back. People were saying that Amazon's dead money. 2008, people were saying the economy is going to get crushed forever. It's never coming back. Housing's never coming back. These tech stocks are never coming back. Everything's done. If you were to take off your blinders in those moments and look at all those distractions and get freaked out, you wouldn't have been able to truly capitalize on the opportunities before you. Whereas if you did put on the blinders and ignored everything else, you would have been able to truly buy fantastic companies at fantastic prices and hold them for several years, decades even, as they compounded year after year, decade after decade, and made tremendous amounts of money for the investors who held on. So that's my advice right now. I know that's a really long-winded way of saying buy the dip, but
Gotcha.
you
It's
need
good.
that psychological understanding to really convince yourself that's what you got to do right now.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description, or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.